So what up, family? This is yours truly, MJ Worthmore, LegalCurrentArtist.com. Legal Current Artist. I want to say thank you for watching this training video for tonight. I wanted to shoot this very quick video for you guys to show you how to backtest a pair, how to backtest your strategy. And what I want to show you guys tonight is how you can see exactly how your step-by-step process works to see if it's something that works for you, and also to give you an opportunity to participate in the market without having to trade your live account. This will allow you to see if I made this decision right here based on what I'm seeing on the charts, based on my step-by-step approach, based on how I approach the market, et cetera, et cetera. Excuse me, this is the trade that I would have taken at this time. This is the target that I would have had. This is the stop loss that I would have had. And this ultimately would have been the result: win, lose, or draw, right? So what I want to do is dive right in and show you guys exactly how I back test, okay? First and foremost, I like to get my music going. Okay. So I'll have my music playing in the background, okay? And now to go to my chart. Okay, so here we go. So this is my approach, right? This is my approach to the market. All right, I'm going to clear everything off for you really quick, okay? So first and foremost, what I do, and I'm not able to show you how to do this back test wise, but one of the main things that I do when I trade pairs that have USD in it, whether it's a USD quote pair or a USD base pair, I look to see what the strength of the United States dollar is, to see if it is weak or see if it is strong, because that helps me to start to formulate my overall directional bias, right? So let's just say I looked at the DXY or US10Y and I saw that the United States dollar was weak. Well, I know that power pulls, and I know that if USD is on the back end of the pair, the quote, and the United States dollar is weak, then it's going to get pulled up by the base currency, which is the currency in front of it. If I know that the dollar is strong and the dollar is pulled, I know it's going to pull the pair down. So I have to look at sell opportunities. Now, if the dollar is strong and the dollar is the base pair, meaning the front end of the pair, then I'm looking for buying opportunities, because again, power pulls up. The power pulls the base. If the base is powerful, it pulls price up, so that's buy. If the quote is powerful, then that's sell. The quote pulls price down, right? So if I see dollar strong and it's like USD JPY and the dollar is strong, I'm looking for buying opportunities. If I see NZD USD and the dollar is strong, I'm looking for selling opportunities. That's the first thing I would check out to see is, if my overall bias as to the strength of the dollar is the dollar is strong or the dollar is weak. Okay. Next thing is I'm looking at the larger time frames, because the larger time frames are going to help you to formulate your directional bias, right? So starting out, first things first, go to the monthly. Okay. So here we are. This is August 3rd of 2020. We are now, of course, in May of 2021. So this is how far I have my back test so far. Right? So as of right now, just looking at this from a monthly, right? Because the bigger the time frame, the more influential the directional bias, right? So right here, if we look at the monthly, we see that on a monthly, each candle here represents a month. We know that we see a moving average crossover. So it looks like on the monthly time frame, the odd dollar, you see I'm trading AUD USD, the odd dollar is going up, right? So just looking at the last few months, overall directional bias is that it's going up. I see that we had a peak low down here, very long wick, right? We even see a little bit of consolidation, expansion to the low. This looks like it might be trending to the high. So overall, very first thing I think is long term, like an institutional trader on a monthly time frame, looking for buys, right? Now I want to see if I can confirm that by scaling in bit by bit by bit by bit by bit until I get to the day when I'll look for my setup, right? So next thing you know, I go to the weekly, okay? Now, looking at the weekly, we see the same thing. We see the crossover to the moving average spread. Now, I am seeing a bit of a push down, seeing some consolidation on the weekly, right? So now here's where I count my levels, right? We've got a deep pull down here, right? Level of rise, contraction, level of rise, pullback, level of rise. We don't know if we're getting a reset or if we're getting, price turning around, right? So as of right now, it still looks like overall we're on an upward trend, but we are seeing some buyer exhaustion. So keep that in mind. Okay. Now we go to the daily time frame. Now on the daily time frame, things look a little bit different, right? On the daily time frame, we see that peak low down there, right? And we do see an upward trend, but we can't ignore the fact that based on those levels of rise and the consolidation levels of rise, we do see what looks like could be a peak high formation on the daily, right? We see it looks like it could be a peak high formation on the daily. It looks like we could have a moving average crossover, right? Which lets me know that there's some potential for a dip. But once again, if I look at the overall, if I look at the larger time frame, going back to the monthly says that there are mainly buying opportunities. So I'm still keeping this in mind because the monthly time frame is more powerful than the daily time frame. Even though the daily time frame gives us our right now setup, overall, what I want to do is I want to go with the overall direction of the trend of the market on the larger time frame, because those are the setups that will more than likely give me the greatest risk to reward and the greatest return on my money, the higher probability trades, right? So now I want to do scale into the 4 hour and see what do I have going on, what's been going on. Now here you see I've got my session breaks. These vertical lines here, they represent what happened during that day. And now looking at the 4 hour, what do I have? It looks like I've got right here, it looks like I've got a peak low right here, right? So now I take this into consideration, right? It looks like I've got a big multi-session W. As soon as it gives me my box, there we go. Looks like I've got a multi-session W, right? So this makes me think, okay, this is the low point. Price won't break through it. I could be looking for buying opportunities when it gets back down here into this spot, right? This is what I'm thinking to myself. I could be looking for buying opportunities here into this spot. Somebody might ask, how do you put those session breaks on, MJ? It automatically separates 24 hours, 5 p.m. to 5 p.m. So you'll just go to your settings, go to appearance, and then you can just click session breaks, or you can if you want to know what day it was this happened on, of course, go to your FX strategy, right? And I want my week and day separator, right? X out of that. Go to my settings, okay? Input. Now, I don't need to see the day separator line because the session break does that for me. So it automatically divides the day up for me. But what I do want to see is the short names, Monday, Tuesday, Wednesday, et cetera, et cetera. I do want to see that, right? And I do want to see the week separator as well, okay? So here we go. So now, when I scale in, I should see the days of the week if I go to the 1 hour. There it is, right there. Okay, awesome. Okay, so now I see we're in a brand new week. We're in Monday, right? Okay, so Monday. I see that on Thursday of last week and Friday of last week, we look like we had a peak low, right? So now all my confluences are saying I'm looking for buying opportunities. Now, what is my trading strategy, right? My trading strategy, of course, is doing my top-down analysis, seeing if I can find an overall directional bias. Is the market in the trending phase or is it ranging, right? Next thing you know, I personally don't want to take any trades before 9 a.m., right? So I can put a line here for 9 a.m., boom, okay? And I know that I also box off my Asian range from 8 o'clock p.m. to basically 3 a.m., right? So I box that off, okay? And now I scale into the half an hour. I want to see what we got, and then the 15 minutes. Okay, so now all I want to do here is see if I have my Asian range properly boxed in, right? So I box in my Asian range. This is all a part of what I do every single day when I'm looking for setup. So I'm boxing my Asian range, okay? And now I'm going to draw a ray out of the center of the range because I know that the ray out of the center of the range is the average price line. And when it comes to the average price line, I know that smart money is selling above the average price line and above the Asian range, and smart money is buying below, right? Now, again, I'm looking for buying opportunities, okay? Even though I do see this expansion to the highs, I'm looking for buying opportunities. So I'm either looking for a buy off the Asian session midline when I get to the time frame that I'm allowed to take a trade, right? I'm looking for a buy off the agent session midline, or I'm looking for a buy somewhere underneath the agent session low, right? And this is when I want to see how does price play out, because as we see here, again, we've got the box, okay? We've got our agent session box, right? So from 8 to the close of the 245 open candle, first thing I do, of course, again, is measure my box, right? I want to see if this is a blown range. So this is a 29 pip range for the Asian range, so it's not blown. If it was 50 pips or more, I would not trade it. I would have to go right to the next day. That's my rule, right? I will not trade a range that's more than 50 pips. I don't care if the picture perfect setup shows up. It's just a matter of discipline. I won't do it, okay? So now I say, okay, great. I've got a tradable Asian range. I've got my my average price line shooting out, and I know that I'm not looking for an opportunity to get into the trade until after 9 o'clock. If the trade shows up, great. If the trade doesn't show up, fine. That's cool. Because it's not about trading every single day. It's about taking the picture perfect setup. And I know what I'm looking for, right? So I'm either looking for a double bottom of some kind after 9 o'clock against this agent session midline, or I'm looking for a double bottom at, beneath the low of the session, probably in this box somewhere, because this is where that multi-session W formed last week. This is my analysis, and this let me know if I will win my trade or not, okay? Now, I just play it out. Okay, great. I'm seeing price has now come below. Sorry. Shoot. I did that all wrong, y'all. 9 o'clock is over here. They gave me a whole new day. But that's fine. What I see is that I did not get a trade at 9 o'clock, right? Now, another rule that I have is unless I see a trade opportunity show up by 12, I am not getting in. So this is my line right here, looking for my trade. Okay. I've got to get in sometime between 9 a.m. and 12. If my trade shows up, great. If my trade doesn't show up, fine, right? Now, sorry about that. Now here's the part where a lot of people will say, well, MJ, why didn't you take this buy right here? Well, keeping it frank with you, the main reason I would have taken this buy right here is primarily because it was after 12 o'clock. And I know that liquidity is about to leave the market. So I would have missed this right here. And I'm glad I did have that idea of I'm not taking a trade after 12, because see, if I had taken this trade, this would have reversed down, right? So the dealers are still shorting. This didn't give me a prime opportunity, because when we're looking for buys, you're looking for the lowest possible place to buy. And as we see here, this is not the lowest possible place. This did give us a really nice, what could be a double bottom, but this pushed price down a little bit more. But by having this line here, this lets me know that I would have missed falling into this trap anyway. And that's the reason why you got to have a certain time as to why you would take, as to when you would take a trade and when you wouldn't take a trade. Okay. The reason I wouldn't take this trade right here is because this is I would only see this as a first leg. I would need to see a second leg in order to get in, because I'm only taking position on the second leg of any given trade. I'm not doing any first leg. It's all second leg. If I don't get a second leg, I'm not doing it, right? Now here again, this right here, my trading rules would have saved me here, right? My trading rules would have saved me here. If I can't find my picture perfect setup between the hours of 9 a.m. and 12, then so be it, right? And everybody else says, well, man, MJ, you should have taken the sell. Well, truth be told, I wouldn't take a sell, because overall, my directional bias says that price is going up, right? That's my overall strong directional bias, is that price is going up. So now I'm gonna get rid of that midline, and now it's just a matter of going to the next day. I'll move this over. Okay. Let's play this thing out. Right. Got a new day that started. So now I'm looking for my opportunity. Get rid of that line here. Okay. I want to box in my Asian range. My Asian range is from 8 box. Asian range from 8 p.m. to the close of the 2:45 open candle. So far, I see that I've got a low point right there, right? Let's see what I get during this time frame. This is literally how you back us live, right? Where's the high? Where's the low of the range? Okay, great. So we've got the high of the range right here, just to verify. Yep, that's the low of the range right there. Okay, I want to get a ray, have my average price line, shoot right out the middle. Once again, I'm looking for buying opportunities, right? So in a picture perfect world, I'm looking for a buying opportunity somewhere underneath the low of the Asian range, right? And I'm also looking for my buying opportunity by 9 a.m., right? I would love to get a picture perfect entry sometime around 9 a.m. or after 9 a.m., but also before 12 p.m. That is my rule, right? So let's see what we get. My vertical line, put that right there. Let's see what happens. Okay, price consolidating. Okay, shooting down. Great. Okay, everybody says, oh, you missed that first entry. That's fine. I don't care. My rules are I need to see a buying opportunity. Now, right now, I see the low of the day. I want to get the best possible buying position somewhere around the low of the day, right? So, since I want to get the best possible buying position down by the low of the day, I'm going to draw a line right there and see if price comes back to this general area. I'll even set an alert here to see if price comes back to around this general area, right? And if it does, great. I'm looking for a buying opportunity, okay? Now, everybody's like, oh my God, MJ, you missed the trade. Listen, I'd rather miss the trade because I don't want to buy up here. I don't want to be buying up here. This is where smart money is selling. I don't want to be buying right here. Yes, I see this, I do see this Morningstar against the Asian session midline. I get it. I don't want that trade though. That's not enough. It's not safe enough for me, right? I need to see price come down here, and hopefully I want to see it happen before 12. Okay. Now, does it come back? Hey, if it doesn't come back, I missed that trade, right? That's fine. But as you see, it did go for a buy, right? Now, if I wanted to say, okay, well, MJ, maybe you need to give yourself some wiggle room. Maybe you need to say, by no later than 1 o'clock and just be okay for, the next day. Then I can make that adjustment, right? The other purpose of back testing is seeing like, where does your strategy need some wiggle room, right? Versus being completely rigid. You see here that we had that picture perfect double bottom. This is actually a type 3 buy, right? We were looking for buys anyway. This is a type 3 buy, right? We got this one leg here, okay? So the equities market opened, price came down, respected the Asian session midline, pulled up, gave us a second leg. Truth be told, this was a great entry right here. So I may say, hey, you know what? Maybe you need to give yourself a little bit of grace, MJ. Nothing later than 1 o'clock. Because if we had taken this trade right here, going for the buy, right, with a 25th target, we'd have hit that target, right? So we say, okay, cool. Trades no earlier than 9, but no later than 1 p.m. You make that adjustment to your trading plan if necessary, right? And you see, okay, that would have been a trade if I followed those rules, I'd have won that trade, keeping my stop loss tight, 1 to 2 risk reward ratio, easy money, easy kill, right? And this is literally all you're going to do for any and every single one of the pairs that you want to work with, right? You want to start out again looking at the overall directional bias so that way you can have a sentiment as to what kind of opportunities you're looking for. Then evaluate the lifestyle that you live. Do I trade London? Do I trade London session? Do I trade New York session? Right? If I trade New York, sorry about that. If I trade New York, do I trade a pair that has the United States dollar in it? Can I go to US 10Y and look at that date and look at that time frame and see, is the dollar on a rise or is the dollar dipping right now? What's the strength of the dollar? So that way you can have some overall sentiment. Looking at the larger time frames, monthly, weekly, daily, for directional bias, and then just working out your strategy based on the rules that you wrote, right? So this one trade, if you were to say, hey, if I'd taken this trade using my rules, this is one trade that I would have won, okay? That's fine. Go on to the next day, right? And again, you can always scale back out and see based on the market, what's happening in the market. Okay, great. We got this peak low reset. We see price won't break. I see the price is actually back up on a rise again for the day. My overall directional bias is still that it's going up. Look at the weekly. Okay, great. Price is still going up. Look at those moving averages. Look at the monthly. Great. Price is still going up. We got a heavy crossover. Price seems like it's going high, right? So you go right back to saying my overall directional bias is I'm looking for buying opportunities. The rest is just saying where am I looking for my opportunities at, and what is the time frame that I'm looking to accept my opportunities at, right? If mine is between the hours of 9 a.m. and 1 p.m. Eastern Standard Time, I know where to draw my boxes, right? And I know what kind of setup I'm looking for: type 1, type 2, type 3. Okay, let's do one more, and I'm right out your hair. Okay, so this is Wednesday. This is one of my trading days. Okay, here we go. So we've got the high of the session here. We've got the low of the session right here. Fantastic. I can just eyeball that and tell that that's not a long range, but still, just follow our discipline. We want to measure it. Okay, let's measure this box. Fantastic. This is an 18 pip range. This is a beautiful range to trade in, right? We're looking for buying opportunities, hopefully below the range, right? We're looking for buying opportunities, hopefully below the range, right? Maybe we might get a low reset, right? Where they actually retest the Asian session midline from yesterday. Let's see. All in all, what we do, same thing. It's all about doing the same thing consistently. It's all about having a routine, right? We got a routine, okay? And now, that price do its thing. Oh, by the way, we got to draw our line, right? Because we're not taking any increase until 9 o'clock or after, and we're not taking any entries after 1 p.m. Eastern Standard Time. So now we just want to see how the price play out. We know what we're looking for. What we looking for? We're looking for buying opportunities. Hopefully, we want to get a buy at the low. Maybe it gives us an Asian set. Oh, here we go. Uh-oh. Now, okay. Now we look at this right here. This looks like a type 3, but this is a fake out move, right? Above the range, down to the midline, above the range, right? Somebody else might sell this down and think, oh yeah, it's time to go all the way down. But we're not looking for sells, we're looking for buys. Why? Because we have our overall directional bias, we have our sentiment. So let's say you said, you know what? I do want to take this trade, right? I want to take this trade and I take the risk, right? I want to give myself a 20 pip target and maybe a 15 pip stop loss, right? See if you take this trade. If you win it, write it down. If you lose it, write it down, right? And ask yourself, will I take a second shot if I lose this trade? Okay, here we go. 15 pip stop loss. All right, let's see what we get. Let's see what we get. What happened? Hey, looks like we won that trade. We killed that trade. So now you write it down, right? I smashed this trade. Here is where you say, okay, cool. I would take profit, right? Up here. I would trail my stop loss. That's a 37 pip kill. You murked this trade. Now, why did you win this trade? Because, you know, you saw right here, even though this looked like a picture perfect expansion out of the high, respecting the midline, expansion out of the high. Like, this was a picture perfect double top if somebody didn't understand the overall directional bias and sentiment of the market. So if somebody had taken this entry right here, they would have got a few pips of profit, but then we see price reverse right on them in the New York session and cook them up, right? Here's the beauty of why I waited till 9 o'clock, because if I would pull the trigger too early and I didn't have an overall directional bias and sentiment as to whether or not I was buying or selling from the larger time frames, I might have seen this and said, oh man, sell it down, thinking that my target was down here somewhere. When in all actuality, this probably would have gave me, what, 3, 4, 5 tips, and then turned around and would have killed my my stop loss. This right here, you see, this is exactly why you backtest the strategy to see if, does my strategy work? Do I have a sound principle, right? And that's it. That is how you backtest the strategy, okay? So I hope you found some value in this video. Please use this to your advantage. I'm telling you, like, you know, a lot of people brag, you know, or a lot of the old heads in the trading game say, oh, you got to have more time in the marketplace. I disagree, right? Like, you can have a lot of time in the marketplace without spending the earth or spinning the sun 365 times, right? Like, if somebody says, yeah, man, you got to be in these markets for at least 3 years. Okay, cool. 365 days times 3 is, what, like 1,100 days, 1,200 days? What if I back tested 30 days worth of information for 40 days straight? That gives me 1,200 days of experience, right? And you see right here, we literally just back tested 3 days, right? And it was fun. We have fun doing it, right? So back test, a week, 2 weeks, 3 weeks, a month, right? And work out your strategy, iron out the kinks of your strategy, and see if you working your strategy out works for you, so that way you can go into the chart more confidently because you worked out your competence in the back testing stage. This is going to be the single greatest key to help you make money in these markets. It's the thing that I did, it's the thing that my wife did, it's the thing that every 7, 8, 9 figure trader has done. You cannot skip this part of the process. You must iron out your strategy, your do's, your don'ts on the back testing side of this, of the market. Like, you got to be able to back test your strategy. And if you can't back test your strategy, you're doing yourself a disservice. Okay, so hope you found some value in this video. Hope this helps. I'm gonna let this thing process down. I'm gonna get this out to you guys. The homework is, I want you to pick one pair, just one pair. Pick one pair. I want you to iron out your trading rules, iron out your strategy, the things that you do and do not, the things you will and will not do. And then I want you to back test that strategy against your pair. And if you lose a trade, be honest with yourself. It's just you and you and you. No judgment zone, right? Write down the trade that you lost, what you saw, what was incorrect, and then do the research to see, well, why did I lose this trade? What happened? What was it that I missed on this trade right here? Okay? So that, my friends, is going to be your homework assignment. I'm expecting you to at least back test at least 10 days. Back test at least 10 days and have your trading strategy ironed out for me, so that way next week on Monday and even on Wednesday, we can look at some people's back testing strategies. We can look at the pairs that they worked out, and I can promise you guys, you will go into these charts way more confidently. You'll go into way more confidently because you'll know I put in the practice, I put in the reps, I put in the work. All right. Hope you found some value in this. Look forward to seeing you guys' homework and look forward to seeing you on the next call. Much love to you. Take care. Be blessed. Peace.